Good morning, everyone. This is group number 6. My name is Ganesh. Welcome to our online PPT presentation about foreign stock and health insurance. We are moving this project with name Alpha Bulls. Alpha Bull signifies our commitment to deep analysis and research to unlock exceptional performance in both the stock market and the health insurance industry. Our group members include Arnav, Surya, Esprit, Karan, and me Ganesh. This is the table of contents. The project. By exploring basics, tailored recommendations, and accessible avenues for beginners, our goal is to empower individuals with informed choice in navigating these crucial aspects of financial planning. Our insights derive from extensive data collected via a questionnaire reflecting real perspective for actionable and impactful guidance, empowering choices in health and wealth, illuminating the path to secure futures and thriving lives. Now we start health insurance.
Introduction. Welcome to the comprehensive guide to navigating the healthcare landscape and understanding health insurance. This presentation will provide an in-depth overview of key concepts and practical tips to make informed decisions. Health insurance, sometimes called health coverage, pays for all of the cost of health services you receive. Visit to the emergency rooms. It helps you keep your healthcare cost predictable and affordable. Understanding health insurance. Health insurance or medical insurance is the type of insurance that covers the whole or the part of a risk of a person's incurring medical expenses. As with other type of insurance, risk is shared among many individuals by estimating the overall risk of health risk and health system expenses over the risk pool. As an insurer can develop a routine finance structure such as monthly premium or payroll tax to provide the money to pay for healthcare benefits specified in the insurance agreement. Health insurance in India. In India, provision of healthcare services varies state-wise. Public health services are prominent in most of the states, but due to inadequate sources and major population opt for private health services. In India, health insurance is mainly offered in two types. Indemnity plan basically covers the hospitalization. Fixed benefit plan pays a fixed amount of decided diseases like critical illness, cancer, heart diseases, etc. In 2018, for underprivileged citizens, Prime Minister Narendra Modi announced the launch of our new public health insurance called Ayushman Bharat Yojana. And the government claims that the new system will try to reach more than 500 million people. Types of health insurance. Buying the right health insurance plan can be a bit complicated as there are different types of health insurance plan in India. To help you out, we have listed all 11 types of plan and have described all significant elements of a health insurance policy so that you may buy a plan that is best for you. With the rise in health-related issues, there is an extreme increase in the treatment cost also. Moreover, there is an increase in the demand of health insurance plans. Therefore, several types of health insurance policies in the market helps you save burden on your pocket. These finance plans not only let you find the best treatment for your health problem, but also keep you stress-free from expenditure point of view. Here are some types of health insurance plan, and for which age group they are suitable for. Here are the descriptions of various health plans.
Individual health insurance and finance health insurance. And the next is critical health insurance and senior citizen health insurance. The next top up health insurance, personal accident insurance, the Mediclaim and group health insurance. And finally, disease specific and ULIPs. These are the differences between regular health insurance and government health insurance plan.
Recommendation for different age groups. Health insurance people believe is mostly required in old age for critical illness like cancer and cardiac diseases. The rise in incidence of illness, however, claims data from the health insurance industry dispels this notion. It points to the need for health insurance at a younger age. Beside the rising future cost of treatment and list of alignments that account for biggest share of claims serves as an indicator for the size of insurance you should have as well as the illness you need to cover. Then young adults opt for comprehensive individual or family plans considering high deductible options with health savings account for cost effective coverage. Catastrophic plans safeguard against major ideal for healthy individuals seeking emergency protection. Tailored young adult plans offer specific benefits like preventive care and mental health coverage, assess extras such as telemedicine, vision, and dental services, prioritized by budget, health status, and expected needs, utilizing comparison and expert advice for an informed insurance choice. Middle adulthood. Focus on long-term wellness, considering mid-tier plans with balanced premiums and deductibles like preferred provider organization PPO or health maintenance organization HMO options. Look for plans that offer comprehensive coverage for preventive care, chronic condition, and potential family needs. Evaluate vision, dental, and prescription drug coverage as priorities. Ensure the network encompasses preferred specialists and medical facilities. Consider plans accommodating potential families, healthcare needs, and possible elder care responsibilities. Tailor the section to address evolving health requirements. Then there are some key terms and coverage components: premium, deductible, co-payment, co-insurance, out-of-pocket maximum, OPMAX, network provider, pre-existing condition, claim and exclusion.
In India, health insurance serves as a financial safety net, offering coverage for medical expenses incurred during to injury or illness. Typically, individuals or family pays a premium to an insurance provider who, in return, covers a portion or the entirely for their healthcare costs. Health insurance plans in India vary widely, offering different levels of coverage, benefits, and premiums. They can cover hospitalization, surgeries, treatments, and sometimes even outpatient care. Insurance companies often have networks of hospitals and healthcare providers where policyholders can avail cashless treatment. Additionally, policyholders can opt for reimbursement of expenses incurred outside the network. Government schemes such as Ayushman Bharat aim to provide health coverage to economically vulnerable sections of society, further augmenting the landscape of health insurance in India. The process for the insured begins when he purchases a health insurance policy. Depending on the coverage provided, the incursions, the excursions, and the premium, you can pick an insurance policy. The insurance company will determine the premium you will pay on your health insurance policy depending on your age and income. It will also conduct a comprehensive medical test to assess your general health. Depending on this factor, it will set a yearly premium and the sum assured will be approved. In case of hospitalization, you need to check whether the policy is a cashless insurance policy or not. If it is a cashless policy, you need to approach the third party administrator TPA in the network hospital. The TPA will get your hospital bill directly reimbursed. If the treatment is not cashless, you will have to pay the bills and the insurance company will then reimburse your expenses. Some insurance policy include hospital cash, which is daily limit that will be paid to you based on the number of days spent in hospital. This is meant to cover daily expenses that may incur in the hospital. If the policy is not cashless, you need to take the hospital bill, the reports, the doctor's summary, the discharge report, and make a claim of the TPA. These TPAs will collect your document and verify them and ensure your claim application is complete. Once the application is complete, they will file the claim with the insurance company. The insurance company will accordingly process the claim and reimburse the bills. The entire claim related process is hassle free and it is not very time consuming, and most insurance companies are helpful in clearing the claims. In case you don't make any claim in particular year, some insurance companies reward you with a no claim bonus. This may be in form of a discount in premium or in addition to the sum assured.
Myths. A video is a good idea. Here is a more detailed video on the topic health insurance in India. And this is a pie chart and survey. Takeaways. In conclusion, this comprehensive guide has equipped you with knowledge and tools to navigate the complex healthcare landscape and make informed decision about health insurance.
Now we start foreign stock.
In today's interconnected world, the potential for profitable investment extends far beyond your home country's borders. Foreign stocks offer a compelling opportunity to diversify your portfolio, gain exposure to emerging markets, and potentially tap into higher returns than available domestically. Embarking on this journey, however, requires navigating unfamiliar terrain and understanding complex financial landscapes. Why invest in foreign stocks? Diversification, exposure to growth, access to unique industries, hedging against currency, and enhanced returns.
These are the different types of stocks. Developed market stocks, companies based in developed countries with mature economics and well-established financial markets. Its examples: New York Stock Exchange, London Stock Exchange. The next, emerging market stocks. Companies based in emerging market economies with higher growth potential and risk. Examples include stocks from other countries like China, India, Brazil, and South Africa. BRICS stocks. Companies from BRICS countries, which include Brazil, Russia, India, China, and South Africa. Foreign currency stocks. Stocks that are traded in currencies other than your home currency. These are some risks and challenges in investing in foreign stocks. There are current risks. Changes in exchange rates can impact the high returns foreign stocks. If currency of the foreign country depreciates against your home currency, it reduces the overall return on your investment. Political risks. Political instability and economic uncertainties in foreign countries can affect the performance of stocks. Cultural and political barriers. Understanding the cultural and business practices of a foreign country can be challenging. Differences in language, accounting practices, and corporate governance can affect the investor's ability to analyze, make informed decisions. Emerging market risks. Investing in stocks from large markets can come with higher volatility and risk compared to developed markets. Factors such as weak institutions, less developed financial markets, and higher susceptibility to economic shocks can impact investment performance.
Researching foreign stocks. Always conduct thorough research, understand the risks involved, and consider seeking professional financial advice before making any investment decisions. Investing in foreign stocks involves additional risks and complexities compared to domestic investments. First, define your investment goals and risk tolerance. What are you hoping to achieve with your investments? Second, how comfortable are you with potential market fluctuations and losses? Second, choose a target market or region. Consider factors such as economic growth, political stability, and currency exchange rates. Research different regions and their potential risks and rewards. Third, identify specific sectors or industries. Focus on sectors that align with your investment goals and interests. Research the industry outlook and potential growth opportunities. Fourth, analyze individual companies. Evaluate the company's financial performance, competitive landscape, and management team. Read the company's annual reports and other financial statements. Consider using financial research platforms like Morningstar or Seeking Alpha. Fifth, compare different stocks. Look at factors like price to earning ratio, dividend yield, and growth potential. Compare companies with the same industry or sector. Sixth, consider the currency exchange rate. Understand how changes in the exchange rate can impact your investment returns. Use resources like xe.com to track currency exchange rates. Seventh, stay informed. Keep up with news and developments in the global market and the specific companies you are interested in. Read financial news websites and blogs. Follow analysts and experts in the field. Eighth, diversify your portfolio. Don't put all your eggs in one basket. Invest in foreign stocks from different countries and sectors. Consider using mutual funds or ETFs for broader diversification. Ninth, be patient. Investing in foreign stocks can be long-term proposition. Don't expect to get rich quick. Focus on building a diversified portfolio and staying disciplined. 10th, seek professional advice if needed. If you are new to investing or unfamiliar with foreign stocks, consider consulting a financial advisor. A financial advisor can help you develop an investment strategy, choose appropriate investments, and manage your portfolio. Recommendations for different age groups. Invest for growth in your 20s and 30s, balance growth and income in your 40s and 50s, prioritize income and capital preservation in your 50s and 60s, and focus on income and capital protection in your 60s and beyond. 20s and 30s, focus on high growth potential, aggressive asset allocation, longer investment horizon, and examples technology stocks, small cap stocks, emerging market stocks, etc. 40s and 50s, balanced growth and income, moderate investment horizon, balanced asset allocation. Examples large cap stocks, dividend paying stocks, index funds, ETFs. 50s and 60s, focus on income and preservation of capital, shorter investment horizon, conservative asset allocation. Examples dividend paying stocks, blue chip stocks and funds, bond funds, income ETFs. 60s and beyond, focus on income and market protection, short-term investment horizon, very conservative asset allocation. Examples, high yield bond funds, government bonds, CDs, annuities. How to invest? Investing in foreign stock markets can be an exciting way to diversify your portfolio and tap into new opportunities. However, it's important to understand the process and potential risks involved. First, define your goals and risk tolerance. What are you hoping to achieve by investing in foreign stocks? How comfortable are you with potential market fluctuations and losses? Second, choose a foreign market. Research different regions and consider factors such as economic growth, political stability, currency exchange rates. Start with markets you have some familiarity with or are interested in learning more about. Third, open a brokerage account. Choose a broker that offers access to foreign market you are interested in. Some brokers specialize in foreign markets and may offer additional services and support. Fourth, fund your account. Deposit funds in your brokerage account in a currency accepted by the foreign market. Consider potential currency exchange fees and fluctuations. Fifth, research and select stocks. Analyze the individual companies using financial research platforms like Morningstar or Seeking Alpha. Focus on companies with strong fundamentals and growth potentials. Consider factors like PE ratio, dividend yield, and industry trends. Sixth, place your order. Once you have selected stocks, place your order through your online brokerage platform. Choose between market orders or limit orders to control the price you pay. Seventh, monitor your portfolio. Regularly track the performance of your investment and adjust your holdings as needed. Stay informed about economic and political developments in the foreign market as you have invested in. Additional tips: start small, diversify your portfolio, consider exchange, seek professional advice.
There are some popular foreign stock exchanges. There are numerous stock exchanges around the world where companies list their shares for trading. Each exchange has its own characteristics, regulations, and market dynamics. The first one is London Stock Exchange. It's the one of the oldest stock exchanges. It is a major center for international market listings, and it has a diverse ranges of companies listed across various sectors. The next is
हाँ
Tokyo,
बोल
Japan, the largest stock exchange in Japan and one of the largest in Asia. It lists many prominent Japanese companies including those in technology, automotive, and manufacturing sectors. And the next is Hong Kong. It's a major financial hub in Asia. It is known for hosting a significant number of Chinese companies. It provides a gateway for international investors to access Chinese stocks. Next is Shanghai, China, one of the two main stock exchanges in China, along with the Shenzhen Stock Exchange. It lists many of China's largest and most prominent companies. These are some global economic trends: supply chain disruptions, inflectional concerns, geopolitical tensions, and climate change and ESG focus. The performance matrices. The first one, total return, captures both capital appreciation and dividends. The second one is volatility, measures the variation in stocks price, indicating risk. The next is Sharpe ratio, accessing a risk-adjusted return, considering volatility. The fourth one is beta, indicates a stock sensitive to a market movements. And the benchmarks are MSCI World Index, global equity benchmark for international stocks, S&P 500, US benchmark often used for global stock comparisons. FTSE index covers developed and emerging new markets excluding various local market index. It specifies countries stock market index, specific country stock market index. A video is a good idea. Here is the more detailed video. This is the survey we conducted. The survey about the long-term, short-term investments for different age groups. And the next is market knowledge about stocks. And the next is sector preferences.
As we conclude our journey through foreign stock investments, we have developed into its significance, risks, and research methodologies. Armed with age-tailored recommendations and insights into global exchange, let's remember the power of diversity in investment. With this knowledge, let's confidently navigate global economic trends and performance benchmarks, leveraging foreign stocks to bolster our portfolios for lasting financial growth.
Conclusion. As we conclude our presentation, we hope our audience takes away a deeper understanding of two vital aspects of financial planning of health insurance and foreign stock investment. Our timeline. This was our group's timeline. In first week, we did team discussion. Then we did our research. After this, we started making our PPT. And finally, in week 4, we are doing our seminar. Thank you